And we have Taofeek Subair, who is an investment research analyst with Pathway Asset Management. How are you doing, sir?
Very well.
Good to meet you. Happy New Year. Which I should be saying that in May, or should not be saying it in May. Do have a seat. Thanks for joining us. So, Taofeek, it's great to have you. I guess the first question we start with of course, with Access Holdings and the impairments, just to jump in there. And we've been seeing a whole lot of balance sheet cleanup, if you will. So with UBA, we've seeing it here. What do you make of Access as far as the impairment there?
Okay, so the impairment came in at over 500 billion naira.
It's a lot.
So that is a trend across the industry just to clean up the balance sheet.
Yeah.
So coming from the CBN policy that was passed earlier last year, so all banks are given that mandate to clean up their books. So that's the reason why they had to make such a huge amount of provision to account for the non-performing loan, just to ensure that the balance sheet is solid and de-risk the balance sheet.
Gotcha. No mention of a dividend in the results. I guess we saw with UBA when they didn't come out with they didn't declare a dividend for full year. We spoke with the group managing director, CEO, the head of risk also mentioned it as well. They addressed it with Access. I guess, does it make sense looking at the balance sheet cleanup and where things are with the hits they took to the financials, or how are you seeing it? Okay,
the way we see it is the provision, they had to retain the earnings just to support the cleanup of the balance sheets.
Yeah.
So that's going to increase the capital adequacy ratio in such a way that the risk-weighted assets now is going to be moderated. They are now taking more risk, looking at the increments we saw with the the loan books.
Yeah.
So they have to ensure that the balance sheet is solid enough, just so that it doesn't get fragile.
Gotcha. Okay, so I guess risk management there, balance sheet review there. As far as, because comprehensive income, I saw that fell by about 58% or so, from $1 trillion to 400 and something billion. Despite all that and impairments, I guess the FX losses as well, still managing to come out with $1 trillion naira.
Probably for us.
Exactly. What do you make of the ability to absorb that, everything that they absorbed, and still come out with a PBT of $1 trillion?
Looking at the profit before tax of over $1 trillion naira, so there is a past that has not been accounted for, which is the FX exposure. So if you look at the fair value of their FX exposure based on the balance sheet,
yeah.
So if you account for it, looking at the comprehensive income, you will see that it fell.
Yeah.
So if you now check the core profits now, it is not up to the 1 trillion. So that's take me back to the retained earnings that I mentioned earlier, that they use just to support the balance sheet, so that they don't allow things to get fragile. So that's the core reason why they didn't even intend to proceed with dividend. And I'm very sure the regulators will also want to ensure that the balance sheet is solid enough and they don't get to...
That's, of course, the Central Bank of Nigeria. Yeah, they've really taken an eye to that, to making sure all those things are cleaned up. How do you think, it's a public holiday, should be said, this result was released around 2 a.m. in the morning on a public holiday, so the markets are closed. But how do you think investors will respond on Monday? And before you begin, I should point this out, that after UBA released their earnings, UBA, First Holdco, Access all fell. Exactly. Their stock rise. So
it has been, majority part of it has been pricing.
Yeah.
So if you look at the current price of assets in the markets, is trading it closed at 27 naira.
Yeah, that's right.
So that is not too far from what it was doing somewhere around November, when it fell from 26 down to 25.
Yeah.
So most of this has been accounted for. And if you look at the Q1 2026 reports, you can see a significant growth in the customer deposits, which jumped up by over 50%, meaning they now have a cheap capital that they are going to use to generate more income. So if you look at the cost to income ratio, it fell sharply. So it means with that customer confidence that they have, that increase their their deposit by the customers. So it means going forward they can make more money with cheap capital.
So are you so I guess looking at we still have First Holdco to as far as the tier 1 banks are concerned. Just looking ahead, I guess this is just a period of a balance sheet cleanup for a lot of these banks. Do you foresee a recovery, going forward for a number of these banks like an Access and the rest after we get past this period of acknowledging these impairments and so on?
So I feel like the impairment is not something that is going to occur in the near future.
Yeah.
Because the one part of the discussion is, will impairment occur? Another part of it is that most of these impairments is not as if they won't go back to get all of this loan. They will always go after the customers. Yeah. And by the time they recover this loan, they are going to write it back, which is going to support the margin going forward. So,
gotcha. Makes sense. Makes sense. Let's quickly jump to Dangote Cement, going from banking now to the industrial sector. What do you make of there? I guess for the first 3 months of the revenues, particularly the drivers for Dangote.
So looking at Dangote Cement and the industrial sector generally, what is driving the upline is the volume. So we can see from their core business that most of this money is coming from government spending, government infrastructure. There is a lot of road that is being constructed, and now what they use majorly in road construction now is concrete. Right. So a lot of cement is needed. Okay. So that is what is driving the the revenue line.
Fantastic. Now, going cost of production, though, I mean, it should be said, revenues grew at 20% clip, cost of production up 10%, but 448 billion, still a sizable amount of money for cost of production. What do you look at the drivers in
so
cost?
So if you try to take the cost of production as a fraction of the revenue, you see that it is less than 50%, just roughly around 42%, which is okay, meaning they have a gross profit margin of 58%. And if you take it down to the bottom line, it's double digit, over 20%. That's significant. And that is trailing the same magnitude that they reported in 2024. So the base year, they still try to match and surpass the base year, coming from a very strong base year, to be precise.
Okay, but I guess in terms of what makes up their costs, are we looking at what? Energy, haulage and things like that?
Yes, majorly energy, right? Yeah. So if you look at the production parts, majority of what they need to get the product out is energy driven.
Gotcha.
So what Dangote has done, and most players in the industry, they try to diversify their energy mix. So if you go to the haulage parts, we have seen different initiatives from diesel now to CNG. So that's what they are using to manage the costs, just so that they can save enough of money in order not to potentially increase the price that is going to affect the volume.
Makes sense. And now, of course, you talked about that gross profit margin translating to the PBT and the bottom line, but 35% growth there for profit before tax, and then profit after tax up by 53%. Well, what was your assessment of how the bottom line for the company? So
looking at the bottom line, it's so solid, and it looks sustainable with a kind of caution. Okay. Because if you look at the environment now, we understand that the business is energy driven, right? And we have been seeing the interplay with oil and fuel prices.
Exactly.
So it means if for a sector like this, if the war continue for so long, it can have effects on the bottom line. Yeah. But looking at what the company has done, like they already have a good strategy. They are increasing their production, they are increasing their footprints beyond Nigeria.
But in Africa, right? Cote d'Ivoire, Ethiopia.
Collectively, it's about 11 countries.
All right. But it's interesting. I'm glad you mentioned that. I think Nigeria revenue still was about 800 billion out of that 1 trillion, and the rest
expected. It's expected because if you look at the production capacity, is majorly concentrated in Nigeria. Yeah. So other regions, they are just trying to diversify, just so that they try to create a kind of comfortable zone for them in case there's any issues.
Because I think the rest of Africa, the rest of their footprint, I think their revenues was up about 14% year on year.
The volume was up as well.
Yeah, as well. The volume gain behind that too, right? Taofeek, we've got to have you back on the show. Thank you so much for the very insightful analysis here on Access Holdings and Dangote Cement. Taofeek Subair, Investment Research Analyst at Pathway Asset Management Limited. And thank you for coming on a public holiday. Happy Workers' Day to you.
Thank you for
Appreciate it.